Hi guys, we're back in part 2 of the web series, and in this one we're going to talk about what exactly is a stock. Any idea what a stock actually means?
Not really.
No? That's fine. Okay, so we'll get straight into it. Okay, so a stock basically means you are a part owner, so it's a share in the company. So you might have heard the word share before.
Yeah.
So stock and shares.
Yeah.
So you own a share of the company. It's not much, but you still own it, and that's an investment into that company which you think basically are going to progress and do better, basically. So we'll put an example into it. So you have your own business, okay? So your business is PSF.
Oh, you're so funny.
So do you know what PSF stands for?
I have a clue.
Go on.
Priya stinky feet.
Inside joke. So you have a company called Priya Stinky Feet, and they make products to help people's feet smell better. Or whatever it is, maybe it's a shoe company, who knows. But the basic premise is you have a company, and this company is doing well, it's profitable, and it goes from having one store to multiple stores. Let's say it has 10 stores or something. It doesn't make a difference really.
Yeah.
It's doing well. That's the point. And now, Priya Stinky Feet, your company is worth, let's say, a round number of £1 billion. So if Priya's your company, Priya Stinky Feet, is now worth 1 billion and you want liquid cash, you want to give away 50% of your company.
Yeah.
I should explain. So to become from private to go into the stock market, so going public, you have to have something called an IPO, initial public offering. You don't really need to understand what an IPO is, but you just have to understand any company that goes from private to public to allow public investors to be involved goes through this, an IPO, initial public offering. So Amazon, who else? McDonald's, Coca-Cola, they all done this. So let's just say you've gone through your initial public offering, you're offering 50% of your company up. Some companies, when they go public, offer more, some offer less, but we're just saying 50%. Okay. So 50% of your company offered up is
500 million.
That's it. 500 million. So you are giving 500 million. You are getting 500 million.
Okay, yeah.
And you're offering that equivalent of shares to public investors. So I go now, Priya Stinky Feet, they have gone from having one store to multiple stores, and they are doing well. So I think their company's going to do good. So I'm going to invest in your company. So when I invest in your company, I'm now going to have something quite small, like 0.005% of your company. So I bought shares in your company, and this is how much now I own in that company, in your company.
Yeah.
Or some people can own more. It can be 0.05%. Maybe even 0.1% or something. It's quite a small portion of that company. So the main thing to know is, I don't want to get too much in the business side of this, but even though they own a part of your company, they can't make big decisions on your company because they're so small. Their kind of influence is nothing really. So say if you decide to change Priya's Stinky Feet, the name of the company, to Priya's Very Stinky Feet, then they don't have a say in that. That's up to you. But the main thing to take is it's quite a small kind of share in the company, but you are nonetheless a shareholder in the company. But now let's say that I have 10 million pounds worth of Priya's Very Stinky Feet. Shares and stocks. And now that's me saying, I believe in the company, and I'm hoping it does better. And it does do better. The company's doing better. The market value, the worth of your companies goes up, the market value goes up, and the stock price goes up as well. So the stock price has gone up, say, let's say from £5 now to £10, or from £5 to £6, or whatever. It's just gone up.
Yeah.
So the 10 million I own in your company in stocks and shares, I can go, do you know what? I'm going to sell it off to another public investor. I'm going to sell it off to mum. And I'm going to say, mum, look down the couch because I want 11 million for it.
Yeah.
And then, you know, mum can be like, oh yeah, it's doing even better. The stock price has gone up. So I'm going to sell it now for 12 million. So mum sells it to someone else for 12 million, and so on and so on. So you can constantly, you know, buy some stocks and then sell them off or trade them off to other people at a higher price when the company value and the stock value goes up as well.
Okay.
Yeah?
Yeah.
So the basic concept here to take away is that a stock is you're buying ownership of the company, a part ownership of the company. That's the main thing to take away from this. And that's what the stock market is. It's the buying, selling and trading of stocks and shares. All right. Does that make sense?
Yeah, that makes sense.
Yeah?
Yeah.
Okay, good. We got that then. All right. See you in the next one. All right. That's good. That's better. We're doing better.
I think when you use numbers, it helps me more.
Yeah.